go through just a very brief intro that I'm going to cover. You guys definitely aren't here to hear me talk, so I will be very brief, and then we're going to turn it over to Scott. Scott's going to share with you guys one of his favorite strategies for tonight. So real quick, before we get started, you guys know this. You've probably seen a disclaimer or two in your day, but 3 disclaimers that are very important to cover. Number 1, trading's risky, and past performance does not always equal future results. Number 2, we really want you guys to learn a lot, so we do our best to book quality speakers. And then number 3, we can neither confirm nor deny that the NSA is not watching you watching this webinar. So that is a recent disclaimer we had to add, but I feel it's appropriate that you guys know that. So we just want to make sure that you're aware of those 3 things. So trading is risky. And again, you know, guys, the guys here are not here to tell you, hey, you have to do this. They're just sharing with you their knowledge about the market. To tell you a little bit about the Trading Pub, the mission of the Trading Pub is to provide a place for our patrons where they can hang out with some of the top traders in the industry. The pub is the place to receive quality education, all while interacting with traders and investors who are just like you. So through the Trading Pub, what we want to try to do is allow you guys to have the opportunity to learn from top traders in the industry. We want you to enjoy things. We kind of feel that everything's better amongst friends, everything's better in a community. So we want you to enjoy your time here. The only rule we really have is just that you be considerate, not only to the speakers in the room, but also to the other people that are here. So again, just be, be kind and treat other people the way you want to be treated. And then also, we try to put a focus on charitable giving, and 10% of any revenues generated through tradingpub.com are given to charities that benefit the inner city revitalization and workforce development are typically the things we try to give our money to. And typically it's sort of smaller to medium-sized projects, where the money that we give will have more of a direct impact. A little bit about us, our website, tradingpub.com. For those of you that are in the Twitter sphere, it's twitter.com/tradingpub. If you're on Facebook, we used to tell everybody we hope you're on Facebook, but that you don't own Facebook stock. Now I guess we wish we did own Facebook stock the way it's been trading lately. But again, facebook.com/tradingpub and then youtube.com/tradingpub. All right, real quick, before we get things going and before I turn things over to Scott, let me ask you a question. You can type in a yes or no. Who in here likes money? So again, who in here likes money? I think most people would probably answer yes to that. We got a couple no's. My guess is that's more of a joke. I like it, don't love it. That's a good joke. That's true. Well, what we're going to do is do a little bit of trivia just to give you guys the chance to make a little bit of money tonight just for showing up. The rules of trivia, number 1, the first person to type the answer in wins. Okay, so the first person to type it in is going to win. Number 2, don't complain if you're too slow. You know, we love the fact that you came in 2nd, 3rd, 4th, or 100th place, but again, that just means that you don't win money. You get to just pat yourself on the back and you can't complain. And then number 3, just to kind of give you an idea, it's going to be a picture that describes something. So again, a picture that describes something. All right, so the first question is, and again, what we'll need you to do if you win, if we say that you're one of the winners, we want you to email support@tradingpub.com. You can email us if you're on PayPal. We'll shoot you PayPal. If you are don't have PayPal, we'll shoot you a check. If you're in the U.S., if you're international, we might have to shoot you some kind of gift card. I don't know. We'll figure it out. But again, if you win, we'll let you know. So the first question, first trivia question, is $50 question. A stock named after a brilliant investor. All right, Dustin P. got it. Tesla. All right, Dustin P., you can email us. Dustin P., you can email us. Support@tradingpub.com. Nicely done. Yeah, Tesla's been a hot stock lately. I think I saw them up at 150 today. So nicely done, Dustin. Win $50. All right, the next question. This is a famous investor. All right, Joe's got it. Buffett, Warren Buffett. Yep, you see the picture here. We've got a little war going on right there. You've got a nice inn in Virginia, and then you've got a buffet. So Warren Buffett. All right, so that was, let's see, who won that one again? Joe H. Okay, Joe H won. There we go. So Joe, email us support@tradingpub.com. Let us know your PayPal. All right, last trivia question, then we're going to turn things over to Scott. So if you haven't won money tonight, this is your question. You're going to win. All right, a famous investor. Famous investor. All right, looks like James S. got it. James S., nicely done. Yep. James S., email us. I think you got it, didn't you, James? Let me check this. The good thing is it puts things in line. Oh no, it wasn't James S. It was Steve L. James S. typed Doe. Okay, Steve L. email us. So Steve L., you won that one. All right. So, all right, good deal. So again, you see Carl and I, and then a can, Carl icon. All right. Tonight's special guest, the guy that you're actually here to see. See, I have to give you guys money to make you listen to me. Scott is actually going to give you guys a technique that you can use in the market. He's going to share with us one of his favorite trading setups. And real quick, just to kind of give you a little background, you know, we've been promoting Scott pretty heavily over the past week. If you're on our email list, it seems like we're sending you something about Scott almost every day. And, you know, there's a reason that we do that. And the reason we do that is because we really believe that Scott is a professional trader, is somebody that is out to help you, that knows what he's doing. He has a proven track record. And the people that I know that have vouched for Scott are people that I very much respect and trust their opinions. And so when they told me what Scott was doing, I said, okay, we'll help get behind it. But something that I did from day one is I had somebody from Trading Pub actually go into the room with Scott. We had everybody. I had this guy, and we'll tell you a little bit about him later. But I said, hey, I want you to log into this room every day. Any video he does, any recap he does, any special session he does, I want you to go and I want you to be there. I want you to learn, write down what you learn, and give me your feedback. Because one thing we want to do, if we're kind of putting you in front of somebody, if we're sharing somebody with you, we want to make sure that it's somebody that's going to end up being a good deal for you. So again, we do that. So basically, that's kind of the deal with all the emails that you've seen about Scott and his room. We believe in it, and I can tell you it has been a incredible past couple weeks with the types of trades he's been calling. So Scott, at this time, I'm going to turn things over to you, and you can kind of get your charts going. I'm sure. And Scott, if you could tell us just a little bit about how kind of your background in the markets before you get started.
Yeah, let me get this all set up and I'll be right with you. Make sure this is showing. Okay, all right, so you know, I was 50 years old in 2001, and I was in a tech business. I actually worked for my partner, Jerry, he and I worked together, but I worked for him in a very large technology company, and we went through the tech bust, and I lost my job, and you know, I was looking around, 50 years old, I'd made a lot of money most of my working career, tried to get a job, and nobody wanted to hire a 50-year-old for the amount of money that I needed to have. So I began to look around for some other option, and one day I ran into a guy. I'm pretty involved in some charity work myself in Romania, and a guy called me and said, hey, I want to give some money to Romanian orphans. And I said, wow, that's great, let's get together. So I met him, and he was going to give a lot of money. I said, wow, how do you make all this money? And he said, well, I've learned to trade the Forex, and I make anywhere from $2,000 to $20,000 a day. I went, oh my gosh, I'm on the internet every day, and I don't even make the lowest number, let alone the highest number. So that got me started, and I started down a path that most people start down. Invested some money in a trading program that didn't work. I learned all the tricks of the trade at that time, you know, moving average crossovers and scalping and all that kind of stuff. And you know, I ended up being pretty successful, even though I was scalping. But one time I did 78 trades in a row without a loss. And I looked at my account and I realized, you know, I had like $700 more than I had when I started. And I realized, you know, my chances of doing 78 trades in a row every time I sit down in front of a computer are slim to none. And I can't make any money doing it this way. So that set me off on a, hold on, I got a private message here. That set me up on a path to go and find, you know, who knew what was happening really. And what I found out is that everybody knew a little bit, but nobody knew all of it, which meant that I had to go to lots of different places to find pieces of the market. And I did that, and at the same time, my partner, now Jerry, he and I were working with some software, trying to program software. We came up with a methodology. We couldn't find a way to do it on MT4, so we ended up creating some charts. The charts were originally just for us to trade, and we made the mistake of giving them to some of our friends. They told some friends, they told some friends, and next thing you know, we had 100 traders. And we had to then put a server up, we had to do support and all that. And so, you know, ultimately we started with a club, and everybody paid dues in this club, and then it got bigger and bigger, and the next thing you know, we had to make a choice. We either can the whole thing and walk away, or which we didn't want to do because a lot of these traders were our friends, or we had to get drug kicking and screaming into the charting business. And so that's what ended up happening. We ended up creating a charting business. I do the educational part of that process, and it's been a great ride, so to speak. So, you know, that's kind of the quick overview of how I got to where I'm at right now. So many of our traders, by the way, who started with us in 2003 are still with us today in 2013. So that tells you a little bit. Most traders are bouncing from system to system. So that's how I got started. So hey, let's get right into the deal here. I want to talk real estate. If you've been in my room at all in the morning, we talk about two things: wide open spaces and real estate. So, you know, I've already done a webinar on wide open spaces. Many of you came to that. I'm glad to see you back. And I want to talk a little bit about real estate here for a second, all right? So real estate is the piece of the chart that you have to work with every day, right? So every day the market changes, right? So no true trades will ever be the same, since the real estate or the real estate on the chart that you're looking at changes every single day. But several things don't change. One of those is that bankers do what they've always done. And as we all know, it's the bankers who run the market. Technical analysis is the same no matter what the real estate is. The targets are still intact, and harmony and momentum are ever present to make moves. So let's view this practically, somewhere we can get our head wrapped around it. Sometimes the market is just junky, looks like that. Sometimes the market is really neat and orderly, and it looks like that. Sometimes the market is a jungle with no clear picture to it at all. And you're going, what the heck am I looking at here? And that's kind of what that looks like there. And then sometimes we need to run like anything to get away, because the market is really nasty. So here's an example here, when the market just takes off, and takes off. But sometimes it's reversing. Here we got a hairpin turn, right? So there's a hairpin turn in the market right there. If you're not ready for that, you're going to get whacked, right? And then sometimes it's just going up and down like this. So we like to trade the wide open spaces. That's what our forte is doing, is trading the wide open spaces. I'm not going to talk I'll talk a little bit about that, but not a lot today, because I want to concentrate on real estate of the day and show you a great trade that you can do every single day. But see, for us, we're target traders. So we will trade only in areas that have these kind of risk for reward. We're not interested in making a trade, for instance, up in this mess up here. A lot of traders make their trades up in this mess right up in here, and they get whacked, and they wonder why. Well, because the market is trying to get to this area, and it's having trouble getting there. The reason it's having trouble getting there is there's no risk or reward for the bankers to push it there. But once they finally get it to that area, that's when we start seeing bigger moves, and those are the moves that we want to take advantage of, those things right there. So our job as traders is to go into the market and find those spots based on the real estate of the day, all right? So technical analysis always comes from the past, and it gives us a roadmap every day to navigate the real estate. It tells us where the opportunity might exist. It tells us how to move our stops. It tells us where the possible exit is, and what the big boys might be thinking, all right? So this is a Federal Express logo. Some of you have already seen me do this, but the question is, can you find the arrow? Now, the arrow is right between the E and the X, all right? Now, if you've never seen that arrow, you will never look at a Federal Express logo again without seeing the arrow in the logo, right? And that's actually just kind of an example of what a trade setup is. In all the chaos that the candles are creating, there's actually trade setups there that are findable, all right? And they're always hidden or until somebody shows them to you, all right? Now, our entry comes when we have harmony on multiple time frames for a move. One of the reasons that we couldn't do what we do on MetaTrader 4 is that we watch 4 simultaneous time zones, not time zones, but time compressions at the same time. Yes, we're watching the 5-minute where the scalpers are. We're also watching the 30-minute where the intraday people are. But mostly we're watching the 240 and the 60-minute charts because that's where the big boys are. The big boys are analyzing on the 240 and yes, the day chart, and they're entering on the 60. Now, if you don't believe me, all you got to do is read a commentary. A commentary will say this: the hourlies are overbought. The hourlies are oversold. Who cares what the hourlies are? I'll tell you who cares what the hourlies are. The big boys do, because that's where they are entering their trades, okay? So, when harmony exists, we have the opportunity for momentum to enter the market, okay? The most opportune for the time for that to happen is when we're entering a wide open space, a space in the charts on the real estate of the charts, and I'm going to show you it in just a minute on a chart. I'm just trying to get through the verbiage here so that when we go there, you go, okay, I understand what he's talking about now. When there's a space in the charts where there's a wide open space, there's nothing to stop it, the big boys get real interested, all right? Why? Because first of all, the big boys have created that opportunity. The only people who print candles on a chart are the big boys. You and I and everybody in this room could say, okay, we're going to click our euro-dollar entry exactly at 9:07. Everybody could click that thing in with all the money we got in our margin, and we wouldn't even create a shadow on a wick, all right, because we're so small, all right? So only the big boys can create those candles, all right? So what we need is we need discipline. Most importantly, we need patience. Patience to wait till we get to that area, and then we need to be decisive and commit to follow the trade, all right? So there are really just 2 questions to answer throughout the day, and Pip is on here today. Pip is actually, she doesn't work for us, she's just a client, but this is her rule, and it's so easy that we use it all the time. First of all, 1, what are the big boys doing? And what are the big boys doing? And then before we actually place a trade, ask ourselves, what's my risk, all right? So if we can figure out what the big boys are trying to do, then we can identify a trade that has good risk or reward. So I promised Morgan that I'd give him a trade that we see every single day, and I'm going to show it to you here. So it's a sideways move. 70 to 98% of the time in a sideways move, we have a chance of continuing the trend. However we got into that sideways move, the chance is 70 to 98% we will continue the move in that same direction, all right? Now, let's talk about 70 to 98% for just a second. If it's 70 to 98%, that's better than most of us can trade, all right? That means we need to pay attention to a setup that is better than we can trade on our own, all right? So I'm going to show you a little illustration of it here, all right? You can see there's a sideways move. Now, how we got into that move was we were going up. Therefore, we have a 70 to 98% chance of continuing going up. We go up to the top and we come back down. We got into this move it doesn't matter what time frame. Good question, Ed. All of them. Doesn't matter. You can find them on a tick chart, all right? When we go sideways here, all right, we got into this sideways move to the downside. All right, therefore we can anticipate 70% of the time on the low end and as high as 98% on the high end that we're going to break out to the downside. All right, but here's what I want you to see. All right, whatever the move is into this consolidation, it typically equals the move outside of the consolidation. All right, it's to a high statistical probability, in fact, that happens. All right, so hold on, let me get my drawer up here. So what I want you to see here is that the average retail trader, when this happens, and they're in here like this, and they got in a trade, and it's going up again, oh, it's going against me, oh, no, 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 it's going down, oh, no, I didn't, oh, it's going against me, and finally it breaks to the downside. They've been upside down, sideways here for this whole time, maybe 2, 3, 5, 8 hours, and the minute it goes out here, 5 pips, they go, I'm clicking that sucker out, I won. The market did not beat me, okay? The market didn't beat me. I won on that trade. And here's the deal. They got 5 to 8 pips, but the professional traders took 80 pips out of it. All right? That's what happens. All right? Now, one of the things you need to know, all right? Yeah, one of the things you need to know is, what does the market do between sessions? It goes sideways. All right? Therefore, between the New York and the Asian market, the market goes sideways. Between the Asian and the London, the market goes sideways. Between the New York and the London, the market goes sideways. So that means there are lots of these opportunities every single day. All right? So let's go take a look at them live in a chart here. So let me go in the chart. Hold on. And the reason I like this trade, you'll hear me talk about it all the time in the market. I'll be saying, hey, we got a rectangle. Now, we call these the pole. All right? And I'll find you one here, and I'll show you why we call it the pole. I'm going to find an up one because it makes it real easy to see. Okay, so let me find a really nice one here. Here we go. Here's a nice one. All right. We call this the pole because it looks like a flagpole. Here's the pole. There's the flag. Can everybody see it? There's a flag and a pole. All right. So whatever this flagpole is here, that's what they're going to do up here. All right. So let's measure it. I'm just going to measure it. I haven't looked at the charts. I want you to know that's how confident I am in this, that we're going to find trades all over the place. There's where this move started. There's the bottom, and there's the top. Now, here's the caveat to this trade. All right? It's going to do this for sure, 90+%, and it may do all the way to here when it breaks out up here. So you got 2 opportunities for the targets. All right? And we're target traders. We do not make an entry unless we know where the exit is. So I'm just going to measure this. All right, so from the bottom, this bottom right here where it went sideways is 96.88. And I'm going to subtract that 94.83 where we started. All right, that's 205 pips to the upside. All right, so we got a little tool that allows us to project that. So when we break this line, we're looking for 205 pips. All right, 205 pips. All right, so that's 205 pips. Where did they go? Oh, gee, you're so stinking lucky, man. All right? That was all the pros know when it goes sideways. Measure that, and you're going 205 pips. Now, here's the thing we don't know. We don't know how long this is going to take. And here's what retail traders want. They want it to break and go up 205 pips in the next candle. Is that realistic? No. See? So it takes it a while. I'm here on a 240 chart. Let's break it down, and let's go down here maybe to a 30-minute chart, where it's more realistic for what we'd be looking for during the day. All right, so I'm just going to scroll back in here and find a couple of sideways. Oh, here's a sideways move right here. All right, we got lots of them. I want to just show you how many there are. Sideways, 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 sideways. Is there any opportunity here? I don't know. Gee, many, it doesn't look like that happens very often at all. All right, hold on, I lost my calculator. Whoa, I really lost my calculator. Give me a second here. All right. Went under my desk. Dropped it. Sorry. All right, so we'll just take this one right here on the bottom. All right, so I'm going to just simply measure the across the top, then I measure across the bottom. Now it's a line of sight, you know, it's just what the preponderance of evidence tells you, okay? Now we can see that we got into this move right up here. Right here. We got into this move here, and then we went sideways. So we're going to measure from this one to this one. That's the conservative one, but we may get the aggressive one. All right, so you can see that that top line is 99.69. I'm simply going to measure and subtract 99.37, which is the top line from it, and we get 32 pips. All right. Now we know that that we're going to be looking for a 32 pip trade. That's because it's just a small move here. All right. So let's put a trade on here from this bottom. We'll mark the target, 32 pips, and here's the target right there. Now look where they went. You see where they stalled out? 32 pips. All right. Maybe they go further. They did go further. So let's measure the aggressive one, which was on the top here, down to here. Okay, let me mark that again. We got into this move here, but now we can also use the bottom. This is the first move. That's the conservative move. This is the big move. All right. So the big move is 99.69. minus the lower one, 99.09. All right, that's 60 pips on the bottom here. All right, so I'm going to change this to be 60 pips. And there's the target, and look where they went. From that line right there to that stop was 60 pips. It went exactly to it. All right. So, all right. So I've shown you 3 already, and I've hit 3 out of 3. All right. All right. So let's go kind of find a couple more here. Oh, here's a beauty. Look at this sideways movement. Oh man, after a big slug that came down like this, and it goes sideways. Here's what I want you to understand here. When they're going sideways like this, after a big move of sellers, all right, what they're telling you here, when they only go up this high and they start breaking down, going up this high and breaking down, is there are no sellers up here. All the sellers are right here, all right, trying to keep this move intact. All right, that's what they're trying to do. So the chart by itself is telling you we are trying to go to the downside, boys. So we'll measure this top right in here, and we'll measure this bottom right about there. All right, let me take this off. All right, so you can all see that we got in starting from this wick up here. All right, that's 100.63. 163. All right, the conservative line is 112. 112. 163 minus 112. Yeah. That's 51 pips. All right. Now remember, what's the average trader going to get out of here? He's going to get 5 to 8 pips. All right. The pros aren't though. The pros know what they're doing. So the pros go, we're not going up 5 to 8 pips. We're going 51 pips on this next move. So I'm going to target that 51 pips to the downside. All right. Sorry, it went to the upside. On. Color of selling. All right. So here's what we're looking like. This line right here, where it says limit. All right. Where did they go? Right to it. See that? All right. So, all right, you've done 4 of them in a row. You're really doggone lucky, buddy. That's all I can tell you. All right. No, I can tell you, I can just go anywhere in here, and I don't have a problem with finding a sideways move. All right. You can see this one made it. I don't have to even draw it. You can see there's a sideways move. Now, this is what we call a head fake. All right. You know, you get a head fake is when the market makers go, you know what, we got a ton of buyers up here. Let's go up and get those buyers, put them in, because guess what, they put an entry order here and they've asked us to take them in. That's how the bankers look at it. If you put an entry order up here and say, I want to be in for that move, all right, then you said, they have asked us to put them in, let's go put them in. So they head fake it up and then they go. All right, happens quite often, and if you want to see this virtually every day, go trade the Frankfurt market, because they do it just about every single time. All right, so let's just see. I don't have to add it up, but you can see there's a sideways movement. We got in here, therefore we should go down to here. Did we get there? Yes, we did. See, I don't have to do that. I don't trade futures, so I don't know if you can use it, but I know it works like crazy in a forex. All right. All right. Here's a nice sideways movement, boy. And see, every time you see a big move into this and then sideways, here's what you need to do. You need to start filing your teeth. Go get a file, start filing your teeth, because you're going to bite the elephant in half this time. Let's measure this one. This ought to be interesting. All right. Every time you see a big one and they go sideways like that, just get ready. All right. So this top line here is 101, 101.21. All right. So this conservative line is 144, and we could get the aggressive one to the bottom. So 100.44 equals, that's 77 pips on this trade to the downside. When it goes, we're looking for a 77 pip target. All right. So sell 77 pips. We're looking for that target right down there. All right. Let's see if they get there. Oh yeah, they easily get there and they go past it. So what did they do? They did the big one. As you can see, they added that to it down here. That's exactly what they did. See, it's got ADS from the 24th. I moved up and into that, but then did not do a pull. Instead, it did a reversal. Was there anything on the chart that would have added? That's why it's not 100%. Ed, that's a great question. That's why it's not 100%. If it did it every time, nobody would ever trade anything but that, right? I mean, why would you ever do anything else if it did 100% of the time? That's all you do, right? So things that would give you a hint, yeah, there's lots of things on the hint, but I'd have to go look that up, and I'm not really prepared to go do that. I'm just going to try to show you how this works. Okay, there are lots of things that tell you about reversals. Okay. So, on our charts, things that we have that help do that are these additional charts. You see, I told you we're looking for a 5-minute chart. We're watching that. We're watching a 30 simultaneously, watching a 240 here, watching a 240 here, and watching a 60 here. So, you've got a sideways move, and you're looking to go up, and all of a sudden, all of these turn to the downside. You're not going up. See, it would give you the hint saying, well, it's not going to go up. See, all right? So, that's why we have to watch multiple charts. That's why it's so hard to do an MT4, folks. It's just so hard to do. We kept trying to do it, but we couldn't find a way to see that. And so we would get in trades that we thought were good, and they weren't actually good. So let's get off the dollar yen. Let's go to something else. Let's go over to the Aussie dollar here. All right, let me make these candles a little bigger, and we'll go down. All right, let's do it down here on like a 15-minute chart. Real small chart, so we're looking at an intraday move. All right, small chart. All right, so we're looking for an intraday move. Okay, it's 10 o'clock in the morning. We had a move from right here, and then we go sideways right here. All right, see that? We go sideways. All right, so all we got to do is measure this spot from this wick up to this line. All right, now we may get all the way to that line, but we would target this one as the minimum target. All right, yeah, and the lower the target, the time frame, the faster they happen when they break. All right, so we just simply measure that. Okay, so that top line is 9049, and we subtract 8973, and we come up with 76 pips. So when this finally does break up here, I'm on a 15-minute chart, so it's not like it's going to happen in 4 days. It's going to happen pretty quick when it happens. I'm looking for a 76 pip move. Let's see if she does it. All right, I'm a buyer. I'm telling it's 76 pips. I say, okay, that's why we have this tool on here. That's why this tool is here, because we're able to measure it. Let me stop right here. If you don't know this line is here, you will not stay into that line. All right? Okay, oh yeah, stop placement is just on the other side here. Whatever this is, just on the other side. Good question. So if you take the trade here, your stop is here. Why? Because that's your last supported resistance. You see that? It's our chart, ProAct charts, John. We created these charts because we couldn't get anybody else, couldn't get them to be done anywhere else. Now, if this thing breaks, it goes up and starts to falter right here. What do? As a trader who doesn't know it's going here, what will you do? You'll bail in the trade. You go, oh man, it's going down. I'm in. I'm out. Wow, yeah, baby, I got 18 pips today. Wow, look at that. See? That's what happens to traders. Because they don't know where it's going, they bail on the trade. Let's see if it gets there. All right? It's going to take a while. Well, that's where we are currently. So that's our target right now. That's our target right now for tonight on the Aussie dollar. Right there. See? All right, I'm going to go back a little bit further in the past, and we'll find another sideways movement here. Let me find a ton of, there's lots of them. I'm trying, here we go, there's a nice one, okay. Let me take everything off of here. All right, so here's a sideways movement right here, line of sight. We got in from this top right here, right there. All right, so simple. Whatever that is to here is what we're going to do down here, and we may get from here all the way down to here. All right, so I just simply subtract 9076, the top line number, from the 9043, the top number of the sideways move, and it's 34 pips. All right, so I'm looking for a 34 pip minimum, but I may get the whole move all the way to the bottom. All right, 34 pips. I'm a seller. All right, I'm looking for this trade. This is, right, look where they went. 34 pips. Bang. Yes, that's a great question, Davis. We only trade in the direction of the trend in the 240 chart. Here's why. Rectangles are continuation patterns. So if the trend is going up, the market goes up and they run out of buyers. Okay, they have two choices. When they run out of buyers, they either do a bull flag down or they go straight across. There's the two choices. If they do anything in this, they're telling the world we're not going to continue. All right? So this is a bear flag, would be a continuation pattern, but we wait for the bottom and take the breakout here. All right? On a sideways move, what they're telling you is we don't even have enough sellers to do a bear flag. There's not enough sellers to even get here for a bear flag. All right? So when you get a break, hook, and go up here, you go to the target, all right? Because this pattern that I'm showing you is a continuation pattern. It's trying to continue the trend, all right? So that's why it's so high a probability, all right? Now, you can see that they actually went to the bottom one. Let's just check it to be sure, all right? Just to make sure. So the top one was 9076, and the bottom line was 9016, 9016 equal. That's 60 pips, all right? So I'm going to change this to be 60 pips instead of 34. The seller, voila. All right. Daggone it, you did 10 out of 10. Gee, Manias, he's stinking lucky. No, here's the deal. That's how high a percentage it is. You see what I'm proving to you? I'm not telling you you should trade this. I'm proving to you that that's what it does. And I just did 10. Go do 100. Don't do 94 out of that, okay? That's right. They want to go down, but the sideways movement, Jack, is the movement that this sideways movement says, we are not going up, boys. They're not going up. We're not going up. We're not going up. And bang, down we go. And we did 60 pips there. Now, what did the average retail trader take out of that? 5 to 8 pips. Maybe they were lucky and got 10. You see? That's what ends up happening. Because why? If you don't know the exit, you will bail on the trade. Right? You will bail as soon as it flops around the least little bit. All right? There's another sideways move there. Here's a beauty right here. Look at that. Can everybody see that one made it? All right? We got in here. We're going down to here. It easily made that trade. I mean, I can go through here. This is what you should do. You should go back in the past, and you can see every time I see a sideways move, all right, can I prove it? All right? Here's a nice big one. Let's try this one. All right? All right, we've done 12 out of 12 so far, so you can see I'm batting 100% right now. All right? So you can see that my 70% is definitely on the low side so far, all right? But they're not all going to make it, so just get ready. They're not all going to make it, all right? But they all have a good shot at making it, all right? So here's the top right here. That top is at 92.83, all right? The conservative trade is the top line here, which is 92.10. That's 73 pips to the downside. When this breaks, this line, we're going 73 pips on the minimum, and we may go even further. And you see they went further. They added the extra pip down here. See that? All right. Scott, could you talk about why they would be why they would be in an up channel going sideways and going down to find sellers? Yeah. All right. Here's what happens. When the market, things happen here, all right? There may be a fib here, there may be a previous support or resistance here, there may be a trend, there could be anything here, all right? Whatever it is, this technical analysis that stopped them. Or it could be just simply nothing more than the time of day. They ran out of sellers before the London market closed. They ran out of sellers before the Asian market closed. They ran out of sellers before the New York market closed, all right? So what do the big boys do, all right? Now, during this period of time when this is what you and I call consolidation. Right? This is what you and I call consolidation. That's not what bankers call it. Bankers call it accumulation. Right? You went on what we call a break, hook, and go, Gabe. And right, but it really doesn't matter. Whatever your setup is. What is your setup that gets you in trades now? Right? And we have specific rules for our setup. But I'm talking to people who aren't in our realm of influence here. So you have a setup that you use. Right? All right, so what saving? They still happen, all right? It's after the fact, but it still happened. It's a printed candle, all right? Well, I'll show you how you do it. Well, let me finish this, and then I'll show you, because we'll have one right now, and I'll show you how you do it. You just wait for it. That's what you do, all right? So what happens here is the market is we call it consolidation, but that's what the bankers call it. They call it accumulation because they have agreed to take from the broker all the buys, all the sells, all the buys, all the sells, all the buys during this period of time. They've also agreed to take the opposite side of the trade. All right? So what they don't want to do is they're taking all the sells at the top, they're taking all the buys at the bottom right here. All right? So what happens is there are no buys. If there were buys up here, they would be filling orders. That's what they would be doing, right? It's a downtrend. What they found is there are no buy orders here. If there's buy orders here, they'll fill them. You see that? but there aren't any. What does that tell you? There are no buyers above this line. If there are no buyers above this line and we're in a downtrend and we've already had a move to the downside, there are no buyers, who can only be here? Sellers, waiting for that break down there. That's what they're waiting for. All right? So we just got to be logical and we've got to be sensible. All right? We've got to take the market as it is. It's talking to us every single day. One on the New Zealand dollar right now. Okay, let's go look at it. All right? All right, now, we're actually anticipating that this will go up, all right, not sideways. So they're looking to find the bounce here. But let's go over to this one right here. Let's say we're sitting right here. Can everybody see this sideways move right here? And this is live. If we were live, we're waiting for this break right here. All right, whatever your setups that get you into that trade, you'd be looking for that. We would already be able to measure that to there and know that the minimum target is that, and we may get this piece on top of it. All right, that's what we would know. All right, so when we get, where are we going to get the breakout? Where are we going to get? There it is. Bam. Where'd they go? There it is. See? So however you, whatever your setup that gets you in, you can see what ours is. It's an arrow and a painted candle, especially when we have a white dot showing up. That's our setup because our charts are designed to show you the momentum enter the market. All right, but still, the trade setup is the same. No matter how you get into that trade, the trade setup is the same. All right. So, all right, so the question is at this point, have I proved my point? Would everybody say that you ought to pay attention to this thing, all right? It's the trend, AJ, the trend, right? Always trade, because the trade, see, remember, the trade is trying to continue the trend, see? So what are we at? We're going up, you see? We're going up, we're going up, we're going up. Here's the sideways move. What are they trying to tell us? We're trying to go up. See? We're trying to go up, we're trying to go up, we're trying to go up, we're trying to go up. Why? We're in an uptrend. See? We're going up. See? All right. Now I'm doing this on mostly naked charts because you don't know what all these things are. All right. We know what they all are, but that's a real trade right there. But we traded that New Zealand this morning, by the way. Everybody traded in the live room. How many were in their live room this morning and got that trade that are here in this class tonight? All right. How many were here? Because I know a lot of you were there. All right. Joe did. Yeah. Nancy. Yeah. There you go. Keep going. Anybody else? That's it. 6 people. Come on now. All right. There we go. Well, we moved our stop at 32 pips, and we got stopped out on the bear flag. Let me show you why that happened. All right. So let me show you why that happened. Here we moved our stop. We're up 32 pips. We moved our stop, looking for the potential of this sideways move right here. What happened? They ran out of buyers. There's no buyers. All right. So they filled the orders to the downside. What is this? It's now a bear flag. So we pocketed that. We're happy with that. And we were looking for the sideways move to continuate the move. But we got a bear flag instead. What is a bear flag? It's also a buying sign, which tells us to come back later and find the buy later. All right, see? So, all right. And you can also, now, if you just look, just take your charts, wherever you are, and just scroll back on whatever time frame you want, you're going to see tons and tons of these things right here. And all you got to do is take a little drawer and say, did they do that? Yes. All right. Sideways movement here. Did they do it? Yes. See, you can do it, and you won't even have to measure it. I measured it because I wanted you to see how they absolutely do that move. All right. But when they do a sideways move, you better get ready. Look at this. There's a gap here, but you can see it again. Sideways move, in from here, down to here. There it is, all over the place. All right. So, all right. So hopefully that helps everybody. Don't want to spend a lot of time here. We'll certainly open it for questions. Well, first of all, when you're between sessions, that's a great question, Pitt. When you're between sessions, it's going sideways. You don't want to trade unless momentum can enter the market. When can momentum enter the market between sessions? When the market opens, all right? So the measurement is real simple, all right? Let me find you one here, real easy one to see. All right, let me pop it up here. I'm going to find a real easy one so it's just as clear as a bell to you, all right? Let me go up to like a 30-minute chart. Here we go. Here's a sideways move right here. Whatever it does from the bottom to that line right here that's the conservative target on top, that it will go that far. All right. But we also have this area right in here, right there, which it may add to the top up here. Does everybody see that? Does that make sense? How do you know when the trend ends? When it breaks the trend and goes the other way, Hessian. It's very simple. All right. Everybody see that? All right. So that's how simple this is, folks. And it happens day in, day out, day in, and day out. Right? This is not against the trend. It's going an uptrend here. Right? I'm on a 30-minute chart. Right? But it doesn't really matter. The point is not that. The point is, even if they were going against the trend and they went sideways, what are they telling you? Let's be logical and sensible. We are trying. This may be a downtrend. Right? This may be a downtrend. And they stall out right here because of time of day or whatever, right? Stall out. What are they trying to tell you? We have an agenda. We're trying to get to the top of the trend, all right? Now, you would have to decide whether you wanted to trade at that counter trend or not, all right? You'd have to decide. It works for any market, anything that trends, folks. If it trends, that's what this is. It's a continuation of what they're doing now. What they're saying is, you see this, boys? We want to continue this. Don't any of you try to sell it in here, because we're trying to keep this up here because we got to get up to the top of the trend to take it to the downside. Right? That's what they're telling you. Right? Learn the language of the charts. When you learn the language of the charts, then trading becomes very, very methodical and easy. Right? Let me take it to a different chart. Let's go to something like the British pound. Wow. British pound is a rocker, right? We all know that it can rock. Right? That's Corey speaking, so he won't even take that one. All right, here's one right here. Sideways move. Got into it from that candle. That means we're going to go to that candle. All right, see that? That and that are going to equal. All right, there it is. All right, here's another sideways mark. This is a short one. It goes down. You can see it goes over and over again. All right. So we have lots of these kind of trades, all right? But these are everyday trades for us. When we start seeing them in the market, we start salivating, all right? They're everyday trades for us because I'm showing you some things that all you have to do is have a calculator, and you can. Here's the deal: if you can find a trend going down and you see a sideways movement, can you find the top and subtract this line from this line to get this line? If you can do that, you've got a trade, and you've got a trade you can do. All right? That's what you can do. You have a trade you can do every day. The yellow line just finds bottoms and tops. That's all. All right? Let's go over here and find another one. Nice sideways move here. Here's a nice one right here. Wow. Let's measure this one. Bottom, across the top. It's a preponderance of evidence. That tells me it's not here. It's these two tops are the top. That's the bottom. All right? So I got into this move down here. Right here. So, right down here. So all I got to do is now subtract this line right here from this line right here, and whatever that is right there is what we're going to look for up above. All right? So that's 5280, subtract 5137, 143 pips. Anybody interested in a break of this line for 143 pips? Sure you are. Would you commit to the trade? Not unless you knew where it was going. You wouldn't, because it's not going to go straight up 143 pips in one candle, folks. There's the target. What does it do? Oh man, it got up here like this, right? Oh, I bailed in the trade. Why did you bail in? Well, because it's going down against me, man. That's what happened. Oh. Well, why do they do that? Because they do that. It's called a break, hook, and go. They do that 90+% of the time. All right? So where are we going? Up to that line. Well, did we get there? Yes, and even further. So we actually took the top one out. See? Now I'm showing you a trade fill you can do in any chart. If you can find a sideways move on an MT4, you can trade it. It's simply a matter of taking the bottom and subtracting it from how you got into it. All right? That's it. I mean, there's nothing to this thing. It's as easy as it gets. They don't get any easier than this. Not only that, they're there every day. Yeah. The thing is, for us, we would know to stay into this extra bar up here. How would we know that? Because we have a little tool that allows us to do that. All right, so I'm going to click on here, tell I'm a buyer, boom. It's going to tell me you're going here, see? Now, for those of you who aren't target traders and don't use our charts, notice that I found the target up here. When it hit here, I would not limit it out, I would move my stop, see? Because I know this is the target, see? I'm a Forex trader, Mark. I can't answer any questions about futures. But anything that's tradable, we trade silver and gold. We trade that. You know, you can trade the Dow. You know, we can do that. Over the Dow. I got a Dow here. We got the Dow. We watch it every day. All right, here's the Dow. Dow Jones Industrial. Oh no, yeah, Dow Jones Industrials. All right. Here's a sideways move. Sideways move. We got in it right here. What are we going to do? Did we do it? Well, there you go. There's the Dow right there. Bingo. All right. Here's another one over here. Sideways move. Got in right here. Did we do it? Yes, we did it. See? If it's tradable, it's gonna be there. All right. So, you know, this is a trade you should look for every day, folks. And what happens? How many times we get them a day? Millions. I'm exaggerating. All right. Yeah, some of these would be fundies and all that. There's a move up there. There's a move up there. I mean, this is the Dow Jones Industrial, so you can see. It doesn't matter if it's a commodity. If it's pork bellies and it trends, it will work. You know. So there you go. All right. So you can't. There's no. I don't know any way to do it. England, ENGT. To anticipate momentum. Don't know how to do it. We were able to find it, and you can see it. We see it in any chart we have it on. This is the Dow Jones. Can we all see that's where the money came in to make that move? All right. You all see that's where the money came in to make that move. Everybody see that's where the money came in to make that move. Yeah. See, we have a way to do that. That's the edge we have. One of the edges we have on the Forex. All right. That's one of the edges we have. All right. I'll just show you the euro. Oh, man. Here's the euro dollar. What is it? This is a bear flag. What is it? I mean, a bull flag. What is a bull flag? It's a continuation move. They're trying to make that move up here. Our target is 34.18 right now. If we get the move up, bam, we're looking for 34.18. All right? Because we don't trade unless we know where that line is. We will not make a trade unless we know where that target is. All right? Well, we have those for everyone. I was just asked to do one here, so I was just asked to show you a trade that anybody can do every day, and so that's what I did. So, all right. So here's the deal, boys and girls. You know, as Morgan has told you, we're in the middle of Forex target trading. We have lots of these kind of trades that we look at. We have a very high success rate. And we're just letting it. We're opening up for new traders to come in and join us. Okay, we've been around since 2003, so we're not a fly-by-night company. We've had traders with us since 2003. Many of our traders make 5, 6, 8, 9,000 pips a month. All right, so you know, it's available to you guys, and you know, I'll just turn it over to Morgan. I think Morgan wants to talk a little bit more about that. So. You're seeing money come in, Jack. That's what you're seeing on our software. Money come in. We're measuring behind the scenes how fast is the money coming in, because money is what prints the candles. Right? So when we see the money come in, we're looking. We won't trade unless we're. See, the only place that we'll say. Let me back up 1 second here. Let's pull over to. Let's pull over let's do the pound yen. All right. So our traders popped 250 pips on the pound yen earlier this week. All right. Our traders made that trade right there. All right, see that big move right there? All right, now I'm going to spread this out so you can see why. This was a two-part trade for us. There's a wide open space right here, and there's a big wide open space right down in here. There's nothing in here to stop this thing. What did they do? They got this trade and this trade for 250 pips, because we will only trade in these wide open spaces. See, that's where we trade. We won't trade in the junk. All right. When the market goes sideways, we're not interested in trading it. We're interested on if it goes sideways in here and breaks into that area, then we're looking for that area. All right? So that's what we do. Sideways can take a long time. That's right. But so we don't trade. Here's one thing we don't do. We don't trade outside of an overlapping market. Right? We won't trade unless we have an overlapping market. Right? So when London and New York are going, we're going to trade. Right? When Sydney and the Asian market are going, we're going to trade. When Asian and Singapore is open, we're going to trade. When Asian and London is open, we're going to trade. When there is no, when after that, between London and New York, we're going to go to bed. Right? Very rarely, Deborah. And if you want to get faked out, you trade the Frankfurt market. Right? They fake you out every time. Right? All right. So, Morgan, I think it's up to you at this point. I think Nathan said you had some things you wanted to say.
All right, great. Thank you. Thank you, Scott. We greatly appreciate you being here. It's kind of funny, guys. When I asked Scott to come on, I know he's been busy. He's been up all hours of the day doing this live trade room. He's had literally 1,400 people in this trade room each morning, and and so I kind of felt bad asking him to be here. And I said, hey, can you maybe take 15 minutes and just cover one trade setup just to kind of give these guys some education and now 45 minutes later, absolutely just killing it. And I know that you guys are enjoying that as well. So real quick, I wanted to kind of go through this and just you sort of ask the question, do we believe in Scott and what he does? And I think you probably saw there, if you've been joining him in the room, you know this for sure. You've seen the trades, but after hearing him, I think that you guys would say, yes, I believe. Type in yes if you believe Scott actually, knows what he's doing and is doing a good job. And so I think pretty much everybody in here, would say, yeah, absolutely, he's the real deal. And so earlier today, when I started the presentation, I mentioned the fact that we actually had a guy that sat in the room on Scott with Scott each day, attended everything. And here's the thing. The guy that did this is like a lot of you guys. He's a normal guy. He's not a professional trader. He's not a 20-year veteran that, just saw what Scott did and said, hey, it makes sense because I know so much. This guy is about as new as you could get. And so I want to introduce you to him. His name is Glenn. And I asked Glenn today to kind of do a quick little write-up. I said, Glenn, give people some of your background and then talk a little bit about what you have learned from Scott. And so I'll read this to you. You see a picture of Glenn is there with his fiance, Grace, but said, I'm Glenn Obenza from the Philippines. I'm relatively young, 27 years old and still single. He says still single on August 16th. Glenn's getting married to that beautiful bride right there. So congratulations to Glenn. But he said, I belong to a family of 13. My family considered me as the breadwinner even before I had finished my degree, Bachelor of Arts in English, as a self-supporting student for 4 years. Soon after graduation, I worked as an online English teacher for 2 years, but have realized teaching's not the right job for me to earn more and support my family and other people in need, so I decided to work at a call center almost 2 years ago. I did my best to earn as much as I could. Once again, I had financial problems and wanted to earn more, so I resigned and looked for a job online. And fortunately, I've met Morgan Busby and been working with him at the trading pub for almost 7 months. Glenn basically said he did not study any business courses in school. Obviously, I knew nothing about the market, trading, stocks, currencies, commodities, etc. until I had a chance to work with Trading Pub. With Trading Pub, I owe a million thanks, and Glenn, we thank you to Trading Pub for I've learned a lot of materials, watched recorded webinars, and of course attended live webinars and training sessions. Basically, these have helped me tremendously to understand the market and how to trade. Well, learning and practicing to trade is quite head-breaking. It took me almost 3 months to learn to start to go with the flow. Trading effectively and profitably will never be achieved because one is smart and experienced. I've realized that trading is about having a system that enables one to obtain profits in a manner that provides confidence, peace of mind, and minimizes risk. The training I've taken is truly the best I've seen to date, and he's talking about his time with Scott. The time and energy I invested for this training is an investment in my future, and it will provide a lifetime of opportunity for me in the foreign exchange marketplace. I'm a newbie to the world of foreign exchange, and I've been practicing to trade on a demo account for nearly 1 month. So again, this, like I told you, Glenn is not a professional trader. Scott's Room offers invaluable techniques, education, and success strategies to me as a brand new foreign exchange marketplace. The ongoing training I've been enjoying, which is done on a daily basis for the past 10 days, is the best that I've seen. And now, just to give you some background, Glenn, that's what Glenn does for us. He attends webinars, he reads materials, and kind of gives us his feedback on people as a new trader, is what I really want to do. So he's probably witnessed over 50 or 60 of these things and said that this is the best that he's ever seen. I'm very thankful to Scott Barkley for his wonderful system, his coaching, and his education. He's incredible. And after everything I've reviewed, he has the best system I've ever seen. And so the reason I wanted to share that with you is to just show this is a very normal person, Glenn, and you see Glenn here in the room. And my goal for Glenn is not that Glenn will just continue to work for someone the rest of his life, but I want Glenn to be able to learn to trade. And so that's been part of it. I've encouraged him. I said, Glenn, get a demo account. Let's practice. Let's try some of these strategies. Let's try to learn, and teach you to trade, because once you learn to trade, really the opportunities open up. And so yesterday, I actually bought Scott's course for Glenn. I had a girl in our office make the purchase for Glenn, so that Glenn's going to be able to spend the next year learning from Scott while he's still working for us, obviously. But I want Glenn to learn how to trade, and so I actually paid for this course that Glenn can learn over the next year. And I started thinking about it, and I thought, what a great opportunity. What's a way that we can help more people get involved? And so we thought through this. A lot of you guys probably saw our email yesterday. But basically, we decided to put up $25,000 of our own money, that's our own money being Trading Pub, to help you guys get started with Scott's program. And so what we've done basically, and Scott, I'll get Scott to come on in a second and just tell you a little bit more about his program. But basically what we've agreed to do to try to help you get started, and we've gotten a lot of emails. We had a lot of people take us up on this, and I've gotten some really encouraging emails of people saying how that was kind of what they needed. Our help was what they needed to get over the hump to join the program, that it really helped them do that. So basically what we'll do, in the email we sent out yesterday, we had set a limit of 25,000, that once that was hit, we were going to stop kind of supplementing the program or rebating it if you guys were interested. But what we'll do, I'm not going to lock anyone out if you purchase tonight. So if we go over the 25,000 amount, which we've got a couple thousand left from that from yesterday. But if we go over that, we'll continue to honor what I tell you here tonight. Basically, we'll pay $500 to you that you can use however you like. So you can consider it a rebate, you can consider it a bonus, you can put it in your trading account, you can do whatever you like with it. If you decide to do the lifetime access with Scott, we'll double that. We'll make that $1,000 towards you that you can get. And so again, our thing, we believe in what he does. Rather than just sit here and tell you, hey, we think Scott's a good guy, we're kind of putting our money where our mouth is. And so basically, if you're interested in doing it, here's what you have to do. I'll post this link in here. Give me just 1 second. I think I posted it too many times there. But 1 second here. And I'll post it in the chat window. But sign up at this link. Sign up at this link that I posted, and all you have to do, email us a copy of your receipt after signing up at that link that I posted. You send the email to support@tradingpub.com, and we'll get you your rebate. So again, we'll guarantee you, everybody here in the room, even if we go past the $25,000 mark that we had set yesterday that we were going to give away to help join Scott's program, we'll do $500 for anybody that is able to do that. So basically, we'll allow you to do that. And Scott, if you can, real quick, just come on, and if you can just kind of give them a rundown of what the program entails. But basically, it's a year of training with Scott. And so Scott can go into more detail. But what I want you to know is that we do stand behind it. We believe in it. And Scott can answer about the software as well. But what we're going to do is, our commitment to you is we're going to give you $500 towards that, or if you join as a lifetime member, we'll give you $1,000 back against that to help with the cost, to kind of help you guys get over the hump and get this training that I think will transform you as a trader and give you a great opportunity. So Scott, can you just talk a little bit about the program and what it offers and answer some of the questions they had?
Yeah, would love to. You know, basically, I've been training people since 2003, 2004. I've got a lot of successful traders. I've trained a couple of traders you would know. I'm not allowed to tell you their name, but they're very famous traders. I've got traded some guys who now trade hedge funds. A couple of guys own multi-million-dollar hedge funds. And but really, my passion is helping the everyday trader get successful. And most of the reason for that is because there was nobody there when I was trying to get successful. I was looking for where can I find where I can become successful. I was willing to do whatever it took, and I couldn't find anybody to do it. So I never forget that, right? So our program is a 3-day webinar that we do 3 days, Monday, Tuesday, and Wednesday from 1:30 to 5:30, and we do a download to your brain of how to target trade. Now, for those of you who've been trading for a while, that means you've got a lot of bad habits to get rid of. Those of you who are brand new, the wonderful thing about that is you don't have any bad habits to get rid of, all right? We go through a methodical process of what you have to know to be able to be successful in the market, okay? There's homework, there's all that kind of stuff, all right? Now, when you go through a 3-day webinar, 4 or 5 hours a day, you know, you're lucky if you can retain 30% of that. So we record every single piece of it in 1-hour segments so that you can go back and watch it as often as you want to. Then, every morning prior to the New York session, I am with those mentored students in the market, and we're looking at specific things that we learned in the target trading class. We don't talk about those things in the New York class because all it does is confuse people. If you haven't been through 3 days of a workshop, dropping something on somebody's lap and they don't have 3 days of what it means, they can't get it. So we basically don't talk about those, but we do before, 30 minutes before every single New York session. Then we trade the New York session together, right? Every Monday night we get together and we have an hour workshop where we go over a specific thing that either the real estate of the day showed us, or something that we're looking forward to this week, or something that we all need help on. All right. So if there's not, sometimes there's an agenda, but normally there's let me help you fix your problems. Let me help you fix your problems. By the way, I'm always available to my mentor students to do a one-on-one anytime. All right. We just schedule it and we do it. All right. All right, then once a month we do a live Asian trading session. We pick a Thursday night that we think will be particularly good, and we go trade that session live. And our whole purpose there is to make money, nothing else. All right. So it's very comprehensive. It's daily. The whole key to being successful is repetition. If you constantly hear the same thing over and over and over again, it suddenly takes hold. Now, the biggest problem traders have is they don't understand why the market is doing what it is doing. All right? That's where one of the big problems is. So we focus on making sure that we are repeating things over and over and over again. Now, about 3 or 4 times we open up our sessions to the world, like we're doing right here. The good news is all those traders who are fast-track traders get to repeat it as often as they want, and there's never a charge again. So they can go back through, go through 3 more days again. All right, so there's Pip. She's already done the 3-day webinar 18 times. Now, Pip came to us. I want you to know Pip is not a customer of ours. She's kind of like she's just she's a client of ours. She doesn't work for us. All right, but what she does, came here. She didn't know 4x from 3x. Let me tell you, folks. And so she started, no bad habits. Pip is a very successful trader today. All right. So the other thing, the software is included. We include two months of the software with you. All right. And normally our software is $200 a month, and the live room is $100. We will not let anybody in the live room unless they have the software. So the live room is actually $295 because we bundle it in with the software, it's $300. All right. So The fast track traders will not pay for the live room for 1 year. All right. So that's $1,200 right there as a gift. All right. But on the third month, our software is a different technology. We have costs that we have to recover. We have things like data feed and those kind of things. We have redundant servers all around the world. So on the third month, you just paid a lot of money for a webinar and a mentorship program. We don't want you to have to go dig in your pocket again. So we include 2 months worth of charts free in the deal. And in a third month, you would only pay $200 a month. Now, most of our traders stay with us 2, 3, 4, 5, 8, 9 years. All right? Because they're with us that long, you have the opportunity to say, I want lifetime access. Okay, I know I got to pay for the charts because that's software. There's a data feed and there's a cost every month. But I want to be in that room lifetime, and I have no plans on leaving. Listen, if you're going to commit to becoming a trader, you need to commit to the process. And you can forget about all those websites that tell you you're going to be a successful trader in 3 weeks. It isn't going to happen, folks. It's not. And it's not going to happen unless you commit and you're serious and you will work at the program. All right? So it's pretty comprehensive, we rarely ever see somebody who doesn't continue on with us. Rare. It's so rare. I mean, we become family. So hopefully that answers everybody's questions. That is included in the cost of the software. So you don't pay a separate fee like you do on NinjaTrader or something else. All right. All right. Now remember, the lifetime cost is only after you have purchased the fast track program. All right. It's not open to anybody else. You have to become a fast track trader, and then you'll have the opportunity to say, okay, if I want to continue and stay here, Pip's been with us over 2 years. Could I stay here and for another year in the live room? Yes, you could. Could I stay for another year in the live room? Yes. You won't pay for the live room. Listen, we make a lot of pips in there. We made over 25,000 pips so far this year. All right. Last year we made 19,000. Why do we make so much more pips this year? Because the traders who were with us last year are better traders this year. So that's it. So you'll have it till Saturday. It's done Saturday, Terrence. Over on Saturday. But why? Because we start Monday. We got to prep everybody. We got to get all those traders in. We got to get them prepped with the right software, with the software ready to go, and all that sort of stuff. So, well, for some of you, we understand it may not be the right time, but don't forget us, because the right time may come in 3 months. The right time may come in 6 months. But if you're serious about trading, then you seriously need to look at saying, okay, where should I be? Someplace where I'll get great training, someplace where I have a community of traders who are really going to help me get to the next level, all right? And someplace where I somebody's not going to hype me thinking that if I use this indicator, I'm going to be $1 million winner in 3 weeks. That isn't going to happen here, all right? You won't have it, Terrence, after Saturday. It's gone. It's gone. It doesn't exist, all right? We close it because then we're going to concentrate on working with those traders and getting them up to the next level. So we won't have another workshop for a while. All right? We don't know. We don't have a clue when the next one is. Typically it's 3, maybe 4 times a year. So fast track program is $2,997. So. All right, I think that's it. Everything we do is recorded, Terrence. And we even have traders who the timing is not right for them because they're doing it in the afternoon. They live in Australia. So they're still coming in because they know they can watch the videos when they wake up. And they can watch. The only thing they can't do is ask the question. But remember, every morning we're live, and they can go, I was watching that last night, and I had a question about that. Well, we're live, so we can ask that. Lifetime is $19.95. That's for lifetime access to the live room. But now the caveat to that is you can't be a lifetime member unless you're a product chart subscriber. All right, so make sure you understand that. All right, and you got a deal? Morgan's going to help you out. If it's right for you, folks, and you're serious, most traders I know are serious about trying to do it. We'd love to have you join us. After they sign up for the fast track, they will get the option to add that PIP. Thank you. There was, but we took it away. We had 2 days for that, and then it was gone. You had to take advantage of it the first 2 days. So there we go. I understand, Zara. Fast track means we're going to fast track you to being successful. All right. You can methodically go through it, trying to find somebody will help you. What about this? What is the setting on the RVI this week? Should I set my slow stochastic at this? All that kind of stuff. All right. So that's it. Fast track is inclusive, and the only thing you do is on the 3rd month you start paying $200 for your charts. All right. So we don't have one because you have a credit card, which means you can make your own monthly installment plan, Pete. There you go. There's Pip answering that. So, again, it's $29.97, Russ, for the program. Right? After the 3rd month, you pay $200 a month for the software. All right. Everything. Oh, you're still in the live rooms. You're still in there once a week with me live at night in a special class. You're still in there every morning for a half an hour before the market opens every single day. And we trade the London the agent session 1 night a month. And yes, we teach 4 strategies that we don't even teach in our live room. All right. So it's not so much. Here's the thing. It's not so much to know the strategy. What's important is to know the structure of the market, why the market does what it does. If you understand what the market does, then you'll be prepared for what it could do. So, yeah, you would, Gardner. Sorry. Yeah. The deal is we use our charts. So you can't be in the room, you can't be trading our stuff unless you don't have the chart. So it becomes part of the deal. It's part of the process. All right? So 3K, first 2 months are included for the charts. Then on the 3rd month, you start paying $200. But you don't pay the extra $100 for the live room. It's included. All right? We stop it whenever the market stops. Typically, it's 2.5 hours, but last week or 2, we've been going actually almost 3 hours. So, no, when you're on trial, you don't get a video. All right, when you're a subscriber, you log into the website. It's inside the website, and you have it every day. But that's, by the way, we do a session recap. As I forgot to mention that, we do a session recap every day. I send out alerts to traders. Let me pop it up here for a second. I'll show you what they look like. All right. All right, so let me see if you can. All right, so let me flip this over. All right, there we go. So this is what our alert looks like. Let me make it a little bigger. So we send 2 to 4 of these a day. Tell you this is an idea we have. Sell the trend. This is the one we did the other day. All right, sell at 149.20, 149.57 is the stop, 148.30, and after the break, hook and go. The trade 1 on the first trade has already been hit. That was a 45 pip trade on the first trade. The second pip was 200 pips. All right, so and you get those at the agent session before every day. All right, they're not trade signals. They're just heads up. Look for this. All right, they're not trade calls. They're just alerts to look in the charts because this is what we've identified. This was that trade, by the way, right here. That was the first part of the trade. That was the second part of the trade. Those were the 2 trades we alerted to. Both of them happened, and one of our traders took 253 pips out of that trade, right there. So I don't know how long it's going to take anybody to learn, But here's what I tell people. If it takes you 2 months longer than the longest person has ever taken to learn this, is it worth it? Yes, it's worth it. So. You pay that later in the year, don't understand that. As long as you're a chart subscriber, okay? You won't get a chance to do that later, though. 19, you only have one chance. In fact, we've never done this before. We've never ever allowed anybody to have lifetime access, okay? Because it's a lot of work to do a live room. You know, it's just the way it is. All right, so it's a lot of work, a lot of cost. You know, these rooms are not cheap, and Morgan can tell you. But but we're willing to do that for people who are serious and who want to commit. You know, one of our traders, Carl, was in the room yesterday. He started with micros, folks, with me in 2003. He's trading $1.5 million now. All right, that's what he's trading today, starting with micros. So. Morgan's answered that. So. All right. Well, you know, Jerry, the whole deal is that you start making money faster than you ever would before, and all of a sudden $200 a month is nothing. That's $50 a week. You need a $50 pip trade one time a week with a one lot mini. That's what you need. All right. So we average 1,000 pips a week, and all you need is a 50 pip trade with a one lot mini to pay for your charts. So. Well, you can get in tomorrow. The live room is open for all of you tomorrow. So there you go. Well, Zoran, I can't tell you that because our record is based on our traders. We don't count my record. My record doesn't mean squat. What counts is what our traders get. So what we do is when we identify a trade and we identify the parameters of the trade, and if the trade happens, our traders who traded it post what they got. We throw out the high, we throw out the low, and we average the rest of them. So that's what makes the difference. All right. So it's not any one count. It's hundreds of traders' accounts who got pips, right? So no, we only do a monthly subscription, Pete. So, yeah, Gardner, that would be correct. 1995, James. No, 1995 one time. See, that's the whole key. And just remember, your chart subscription is a different company. We use technology from a company called Product Traders. And that technology is the technology we use, and that is a separate cost. All right. Thank you, Joe. Appreciate that. Well, you know, the reason it's confusing, Letty, is because you're not a target trader, right? You're not a target trader. It's actually very simple. It's very methodical. But we have to know, you see all these lines in a chart, you go, oh my gosh, that's crazy lines, that's crazy lines. But this is how we identify the areas we'll trade. For instance, to the upside here when we were trading here, right? The only places we would trade was off the bottom here to here, and then all the way to here. So this is what we call the wide open space. There's nothing to stop this thing inside here. And that's why these trades get made. They get made because the big boys, these are the big boys' lines. We use their lines. I teach you how to find their lines and trade through them. And those are where the opportunities are. All right? Most traders are trading this junk right here in poor real estate. No, they're not, John, because we have traders with over 90 different brokers. So. All right. There you go. We look for market structure and wide open spaces, and then we have a trade setup that when we're in that trade setup, in that wide open spaces, we're looking for momentum to enter the market to make that move. All right, that's it. So there you go. There you go, lady. Okay. And once you understand that, the trade will become very evident to you where you should trade and where you shouldn't. Okay. All right, everybody. I think we pretty well tackled everything. So Morgan, I'll turn it back over to you. Pip.
After becoming a member, how much time do you have to become a lifetime member? Isaac, maybe if you can call, they might be best to give them a call real quick and help answer your question with that. So, all right, guys, just a quick recap again. Here's the link one more time. If you want to save this link, we're about to shut the room down, so make sure you save it. And basically all you have to do is sign up at that link and then shoot me an email copy. When you sign up, you'll get an invoice receipt, a copy of your receipt. Just forward your receipt to me, and I'll get with you on how we'll do the rebate, either PayPal, check, Western Union if you're international and have trouble with PayPal. But basically that way it'll take care of it for you. Yeah, James. So basically, what we'll do on that is when you sign up, send me the email with for the $500, and if you end up doing the lifetime, just let me know, and I'll honor that for you. So, all right, guys. Well, hope that you enjoyed tonight's session. I'd like to thank Scott and Pip for taking the time to be here, and all the guys for helping me put it together. And I hope that what we're able to do is able to help you a little bit get over the hump. So thanks again, everyone, and we appreciate you being here. And I hope that the next year is the best trading year of your life. That you guys are in there with Glenn, and encourage him along the way and help him to stay focused and to do a good job.
All right, bye everybody. This is Scott. Have a great time. I'll see you tomorrow morning in the live room.